All right. Welcome, everybody. Welcome to our midday market update for January the 9th of 2017. This is George. I want to remind you that the information in this presentation is for education purposes, does not constitute investment advice. Risk of trading in markets can be substantial. You should carefully consider if engaging in such activities suitable to your own financial situation. Trade Pro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. All right, lawyers are happy. Let's talk about the equity market and what's happened so far today. All right, this morning we opened on some softness or some weak side. We know that Friday was non-farm payrolls. It was a bullish report overall in comparison to where things should be, but it missed the expectation to the upside of what economists had slated for the market. So we didn't add as many jobs. And the Monday after non-farm payrolls is a sleepy, drowsy, and slow day. Okay, so you can't have big profit or target expectations on a slow day, or else you're going to be chasing trades, you're going to be pressing, you're going to be impatient, and that's going to lead to loss. You just got to let the trade come to you. After non-farms, you got to realize, hey, I may not do anything today, and that's all right. All right, that wasn't the case for us, though. We took two trades this morning. We're up about $1,400, $1,500, and we did that live with our group. SP 500 finding some resistance overhead at 2280. Oil has gotten hit big time. That's been the news here on oil, and I'll tell you why. A few reports came out that let me go. I'll show you. I got to read it out to you verbatim because then it makes more sense. All right, it came in at 10:56. Kuwait's oil minister said output cuts will be clear in February. He said even if reduction isn't complete, it will be a start. So basically, they've agreed for this January output cut or a reduction, and Kuwait's oil minister says, hey, you know what? Even if it's not complete by end of January, at least we're doing something about it. That's not a very positive statement. I don't know how you guys interpret that, but that means, hey, you know what? That's slack. You're giving an opportunity for these producers to go back on their word and not cut as much as the agreement was defined. It was written on the dotted line how much barrels they have to reduce. I don't understand what the problem is for them to cut and adhere to those rules. I'll tell you what the problem is: revenue. They're not going to give up their revenue on oil production. They're going to continue to produce to win over some market share. All right, Russia's not cutting until later January. Now Kuwait's saying this. That spooked out traders a little bit, and that's what the sell-off was ignited by at approximately 10:38 or so. That hit the wire. All right. It was weak. Oil was weak overnight, but that comment just added fuel to the fire for some more downside. All right, Kuwait did actually say that they made a larger oil output cut than required by OPEC. And they want oil producers to cut exports as well as production. And they're saying they're looking for some kind of party for the OPEC agreement to enforce, monitor, and track these production cuts. So there was a little bit of bearish sentiment. Oil selling off down to these 52s. This should be support. If we crack 52, watch for these 50-10s to somewhere around 51 even. That should be a good buy zone. I'm looking to get long oil, but not yet, not at this level, especially after a bearish day like today. I'm going to let it settle down in the afternoon and see what we can find there in terms of opportunity. The US dollar holding some of this weakness. It opened towards the high or the close of Friday, and it was pressed lower. Today's session, euros making new highs. One of the notable currencies that got absolutely hammered overnight was the British pound versus the US dollar. That is on Theresa May, Prime Minister of Britain, saying, hey, the pound got pounded because she said, hey, you know what? Hard Brexit is on the table. She said, we don't really want to leave some of the policies of Europe adopted. We just want to get out. We want a hard exit. We want to make an exit run for the door and have nothing to do with the European Union. That's what the people voted for. A hard Brexit means there's more risk. All right, more risk gets priced in of downside on the currency. So the pound has gotten hit quite a bit. On the close of Friday, it was about 22.74. Today it's down 21.64, so about 110 points. That's quite a bit. All right, that's a huge move in currencies. You can see some of that downside's about 121. The flash crash on the pound started at 124, and it dropped below 120. All right, it's recovered some of that, and now we're heading back down towards the lows. So watch out. Keep an eye out on that pair because we're trading on some lows we haven't seen. Okay, look at that. You zoom out, you go on a weekly chart, some lows that haven't been seen for a long time. In fact, that might be an all-time low. Momentum starting to press downwards as well. MACD's swung over. It's tested this 200 moving average. They're both negative. We're on the lower half of the Bollinger Band. The only thing that's not participating here is some volume. We'd like to see some volume at the end of the day to indicate some bearishness. And below 121, we could wipe out a lot of stops from longs up here and here that tried to get long. All right, that's the pound. That's why it's down. In terms of equity markets, other than that, if we go to our 4 markets that we track with, the index, S&P, like I said, 2280 is having a hard time breaking. Dow Jones, 19,935.63 after failing 0.3 points on Friday. Hit 19,999.63 at the high on Friday. Let's see if we make a run at 20K. So far, it's sideways. I think one of the big losers in the morning was the Russell. Russell index was really headed to the downside and pressing to the bottom of these consolidations, but some bids picked it up off the floor. So let's see what happens. I think we saw some selling off really quickly on Russell. I had my eye on that, and it looked bearish until it reversed. Okay, looking at NASDAQ, that's been the strong indicator all session. I'll show you one thing that I anticipated to show only to the trade pros, but I'll show it to you too as well, or you as well, YouTube. Here's what got us into our first trade long for the morning. We noticed that, let me show you here. There we go. It was up here towards the open of the morning session. Like, where was it? It was 9:30. Here's what we noticed. We noticed the red line, which is NASDAQ. NASDAQ was pumping higher, pushing us above these 50-14s on a lot of buying. There's volume going through. It was going heavier. ES was weak. That gives you an intermarket relationship to do one of 2 trades: short the NASDAQ or buy the ES. I hate shorting strong trends like this. Therefore, usually when there's a divergence of correlatory markets, I'd rather pick up the weak one and get long than sell the strong one. So why the heck would you want to sell strength? Why not buy the weak one in hopes of it reversing? Well, we did that trade, made 350 on it relatively quickly and got out, and then market turned around. You could see the correlation snap back into place, led by not the NASDAQ getting weak, but the S&P 500 pulling into it or strengthening to catch up with NASDAQ. That was the divergence. If you missed that, I don't know what you're trading on. I don't know what kind of fancy indicators you want to get out of life. All right, vector vest and all that stuff that gives you green arrows, red arrows to help you buy. But that would have never given you that indication. If you know what you're looking for like that, that's as easy as trading becomes. You just got to know which markets are weak, which ones are strong. I wanted to show you that. It's very important. All right. On to S&P 500, or back onto currencies. I want to show you a few other things, and we'll call it a session with YouTube. Look at the volatility index. Look at VIX. All right, back to 11.6, open at 12. It's getting weak. Trade pros, hang tight. I got to show you a trade that we talked about on Sunday that we're going to materialize very soon. We're going to start to get into it. All right, that's volatility index. I think around 11, it makes sense to do trades to the upside. What kind of trade? That's up to you. What else I want to show you? I want to show you gold. So gold's gotten really strong in today's session. All right, let me go GC1 exclamation on TradingView. That's the futures for the gold session. You can see ever since this divergence momentum was getting strong on the sell-off mid-December, it's picked up some bullish momentum. Trade pros had an indication of when to buy it. We said 1175 to 1180. There's your chance to get long. I am a little concerned that volume's not strong, but not that concerned because above this Bollinger Band, we got a breakout coming. All right, I think gold's ready and primed for a move up to probably around 12.15, and from there into 12.56. So we got a lot of upside on gold. If you look at silver, all right, if you look at silver, silver's starting to do the same thing, trying to fight for these 17s. There's a big battle at 17. Above there, we could break and head north. But remember, there's a lot of overhead supply on silver between 17 and 18. Moving averages, right? Every rally has been sold into. This one might not be different. So be cautious. Look at silver as your leading market when you're trading gold. All right? And also follow the silver and gold ratio. So I'm going to show you that here. If you go to gold analysis, we'll let that load. No, we don't want that. GC1. What we want. Where are my volume profiles? Weird. All right, I might have screwed that template up. But here's the gold to silver ratio, all right? Gold's going strong, so is silver, so this ratio is flat. So watch your gold to silver, watch gold, follow silver as well as the leading market for your gold trade. Look at copper. That's also a nice metal that you need to follow. Don't just watch one market. If you're just trading one market, chances are you're giving your money to the trade pros, which is us. All right? Don't fight us. Join us. one other thing I want to leave you off with was, what was it? Darn it. Mexican peso. Yeah, look at this. Mexican peso continues lower. Toyota Motors today, you have to know this, early on in the session, I'll find it to you and read you what it said. Basically said, hey, we're going to invest in the U.S. And that kind of put some downside pressure on the peso. Okay, let me flip this because nobody follows Mexican USD. It's more USD Mexican. That's the currency pair, USD MXN. All right, so strength in the dollar means weakness in the peso. As this goes up from the lower left to the upper right, that means the peso is going down. Okay, because the reference currency is the dollar. USD is first, therefore strength means US is up, Mexican's down. They're always inverse, these pairs. Toyota Motors came out and made that comment, and that put some downside pressure on the peso because they're basically admitting, hey, we're going to start investing more in the US. So Trump's pressured them to do that. Great. All right, here's some market internals for you at noon, and then we'll call it a day for YouTube and subscribers. We're going to go in and look at our trades and our trade idea for the afternoon. New York Stock Exchange, 262 million shares, 18% below its 3-month average. NASDAQ, 10% above its 3-month average. VIX index is up 3% to 1160. Any questions or comments, concerns, emotional breakdowns? Breadth. Somebody wants to see breadth. Is it okay if we share with YouTube? Let me know because you're a subscriber. And yes, okay, good. Market breadth. Do we have bad breadth? That's the question. Well, I don't. I use Tic Tacs. But you will notice market breadth, or the number of stocks above the 50-day moving average as a percentage, has found resistance at 80 on the 50-day moving average. All right, found resistance at just 65 or shy of 65 at the 100-day moving average. The index can't continue to climb if breadth is bad. If it stays pinned against this level or starts heading lower, there's divergence. This rally will fizzle out very quickly. So watch market breadth. You have to follow that as well as an indicator. All right, guys, that's what I got for you. We're going to review our trades and talk about the opportunities in the afternoon. For those of you that are considering joining Trade Pro Academy, do it now. We got a lot of exciting stuff happening. Here's our trading floor. We're now trading live as a group. We're piloting this out for January. They don't want to make the announcement yet, but I'm going to. And we do live calls here. I shared all my trades. You could see, click here, I showed exactly when I got in this afternoon, or this morning rather, around 10:30. You could see the trade. I show my winners and my losers. I'm not afraid of losing. I'm a professional trader. I lose. I lose often. I just cut my losses. You could see I was ready to get long here, but cut my losses below. That's what you have to be prepared to do as well. All right, guys. It's all live trading here. We do video calls. You could actually do a video call with the group. You could discuss with them, run it by them. What we're creating is a virtual trading floor environment. Sign up. You get a 14-day free trial if you click the link in the YouTube video or go to tradeproacademy.com/free trial. We hope to see you guys there. Trading floor is included in the free trial for 14 days. Take care to everyone. Have an awesome afternoon, YouTube. We'll see you tomorrow at noon. If you have any questions, feel free to email me. All right, guys, trade safe out there and manage risk. Returns will come as a result. Take care. Goodbye. And have a great afternoon.